friends, this is Martin from Secrets, channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show. We will look at what happened in the market during the previous day and then how we can look for a better trade for the next day. And remember, this is for Feb 8, Tuesday 2022. And without wasting time, let's get into the pre-market analysis. Would be primarily based on all of these parameters that you see on the left side. We would additionally have data analysis based on the parameters that you see on the right side, and we'll also have wrap up and some actions for the next day. So let's look at the price action. What you see here, it's a wide range bearish candle that gap down. Wide range bearish candle that gap down. Bank Nifty, left side you have Bank Nifty, right side you have Bank Nifty. That's a daily candles. Clear bearishness that has happened, and it has taken a support. This is support zone, and clearly this is also a previous support zone, you can say, right? Or that support will be more visible here, right? 7200 300 is support zone, and that's where it bounced from, and then similarly 38,000 is a support zone where it's bounced from. So still the change in priority bounce can happen, right? Technically, right? So that's a bounce that happened, right? So the thing is, it's a third consecutive day of fall that has happened, right? 3 days of fall, right? And what has happened? Nearly 4%. So today alone, it was 1.73, 303 points lost. Bank Nifty, 2% lost, 800 points lost in a day. That's the kind of move that has happened. 800 points is this candle alone, right? Overall, that's also a 4% fall on Bank Nifty. Here, this is also nearly 4% of fall, and slight bounce that happened from a support zone. So there is potential for a bounce up. It is on a trend line channel bottom also on the edge. So there is chance of bounce still, you can say. But the thing is, it is a heavy sell-off that has happened in the last 3 days. Right, intraday, if you look at this is what happened, right? From morning, gap down, continuous sell-off. Last 1 hour, probably some attempt to recover happened. Right side, you see the Bank Nifty, right? Some spike up happened in the first 15 minutes, and then trending down for heavy selling continues with not even a straight fall, we can say. Big sell-offs. So Bollinger Bands are showing something interesting. So this left side, what you see is Nifty. It clearly says that there is a high volatile sideways movement is what we are talking about. Bank Nifty, it is a low volatile, slightly bullish movement is what we are anticipating. But today you can see that this downside of the Nifty is expanding the band, lower band, which is slightly bearish. We need to be concerned. Similarly, the upside expansion of the Bank Nifty has slightly slowed down, which also indicates that there is something to be cautious or worried about, right? And also it is closed below the median, so median support is gone. Bollinger Band's median support is gone means it's bearishness. Here, Bank Nifty, the Nifty median support is anyway gone long back, right? So these are also, and 50 DMA also is lost today. Nifty, right? That it's not only 20. Here there is a 20, there is a 100 DMA, 20 DMA, and 50 DMA. 50 DMA support also is gone. So that is a slight worrisome move that happened today. Not only today, in the last 3 days, right? Now, making out of the support resistances that we have right now, 7200, 300, that band remains support. Below that is 17,000, obviously. Then you have 16,900 to 800, that range. Fibonacci 38. This is the supports on the downside. Then if that is gone, then 7600 to 7750. That's the supports down there. Resistance similarly on the upside. 17400 now is got away resistance. Then you will have 17500 to 600 area. Fibonacci 23 is a major hurdle now. Then above that 7800, 850 is a major hurdle. Above that only you can say there is some chance of a rally continuation, right? So then above that 18,000 psychological rounding number. So right side Bank Nifty, if you see the supports is even 38,000. If that's gone, then yeah. So the bounce happened. Another support is there, 37,700, 37,800. So below that, if that too is gone, then you have 37,300, 400, which is the Fibonacci 23 retracement level. Below that, you have 37,000 kind of range. Upside resistance would first would appear at 38,500 levels, and then above that you have 38,900 levels, then you have 39,500, right? 39,000 and 39,500, two resistance on the upside. Below that 38,500, right? So that's the resistance and the support levels for the Bank Nifty, which is based on trend lines and clear marking of support in previous resistance zones, and then also Fibonacci levels. Momentum divergence. First, let's look at the Bank Nifty. Bank Nifty is showing a range shift of the momentum which did not work out. Right, the momentum is lost and slipped to the sideways, which is which is unfortunately not all momentum indications or markings work always, right? So we expected that there can be a bounce that can happen, which did not happen. So it is unconfirmed. Range shift is confirmed only if the price moves above, and so it never moved above and went down, and so it will work out. Bank Nifty. So momentum is in sideways. It was bullish till yesterday. Nifty anyway it was in sideways, continue to be in sideways, right? So median time also it's sideways for Nifty and Bank Nifty. Median time in the sense weekly. Trend indicator, Bank Nifty, Nifty was already in the bear zones, but just not much strength. This turned, slowly turning upside the strength indicator of the green line. This is daily, and for daily Bank Nifty, it was bullish till yesterday. It is crossed out of the bear zone. So trend has turned bearish on the short term. Momentum has turned sideways for both indices, right? That is what has happened in the last 3 days. Now VIX has shot up again and it has gone above 20. You have to be cautious. And black volatility is 90.74. IVP is again shot up to 76 kind of levels. So about 20, it could spike up to back to the 24 levels. So you have to be cautious anything about 20. That's volatility and an open interest analysis. If you see, you can see that heavy call additions have happened here on Nifty, and heavy call additions on the Bank Nifty also. So overall the graph looks clearly bearish. Short build-up is what happened in both indices on the futures open interest. Put call ratio is kind of bearish, 0.43 and 0.53 is bearish. And levels, if you see, highest put rating is in at 17,000, and then highest call rating is in at 18,000. 1,000 point gap and 3 days to expire. 38, 39, 38,000 and 39,000 is the range of the highest put and highest call support and resistances. Right? For the case of Bank Nifty, the range is small, as we have seen in the Bollinger chart. But Nifty, people are expecting that it could be minor moves that can happen. And after that, 16,500 is where the next put rating support is seen, and then 17,500 also has good resistance call rating. Right? So that's the open interest analysis. Correlate that with the chart support resistance levels before you take the long and short positions. Intraday swing or position, whatever. Look at this red all over. Heat map is showing that none of the heavyweights, which is the bank, HDFC Bank, HDFC, all were deep red. Kodak, L&T, Bajaj, all are deep red. Even Reliance and IT also went red. So the only performance sector was metal and chemicals and fertilizers. Like chemical, fertilizer, metals performed. Bigger sector is metal. So rest is all red sector wise. We'll just quickly go through the heavyweights. Right? What is the HDFC index heavyweights basically? HDFC Bank, a red day, and it has broken the trend line. Supports are existing, but set a trend line level. There could be a chance that it can hold the channel. The trend line may need to be adjusted, or it may bounce from here probably. But there is no clear momentum is sideways, so there is no point in talking further. Then HDFC is 40, so above is HDFC Bank. HDFC is actually also red day. There is support close by down here, but momentum is turned bearish now from bullish on the short term. So this is bearish, HDFC sideways, and this is bearish, and lines also red, close red, momentum is sideways. It is some kind of handle formation of the cup and handle that is probably happening. So that could mean that on a medium term it may be good, as long as if this channel is not broken down, right? And then for this the US stocks fell here also, that fall continues. The recovery was seen in the IT sector, but is not sustaining in the NFI also. And ICICI was hopeful, but today ICICI also did not perform and the momentum is lost. We had seen some range shift also at the day, but it seems so lost, and that was on the weekly, I believe. So ICICI Bank on the short term today momentum is lost, and support could be this breakout zones from where it broke out if it is falling. Otherwise, it may be keeping this channel, moving around this small channel. And Kodak also bearish today, and it seems to have taken a support which was previously there. If that is gone, then you have another major support, that is a downside. Otherwise, it may be consolidating here. Sideways momentum is consolidation. TCS is was showing momentum and was moving up the channel, but seems like today was a red day again when the IT overall all market, entire market full, US markets full, so IT, all ITs did not perform today, I believe. Right. So that's the performance. IT fell down 1.3% today, and the momentum was turned bearish. That's the only sector that is bearish now in the short term. Metal closed flat. Inverted hammer is there. Momentum is sideways. Auto sideways. Pharma sideways. Pharma lost 1.4%, 1.3% auto, FMCG 2%, reality 1%. All momentum is sideways. So we'll have to just wait for the momentum to catch up to the bullish on side, at least in the short term, to think about a top-down approach of picking the stocks, right? But Nifty IT fell 1.3% and turned bearish momentum. Now look at this. This is interesting. Institutional participation now. Domestic institutions also have become like Fyers. They started selling huge. This is big selling that has happened. The recent past, I don't think they might have sold this much. So that is the reason why market fell. It was 1,157 crores of cash selling in by the Fyers, and almost nearly 1,400 crores of cash selling that happened from the domestic institution also. Combined 3,000 crores gone. Alright, so that is the worrisome. Dollar index is consolidating and it has cooled off, but USD and currency pair momentum is not there, but it seems to be green and then attempting to hit the 75 levels. As of now, it's kind of sideways movement is what happening in the USD INR currency pair. The real troublemaker is this, where it is heading above 90, 90, 91 kind of levels is what crude oil is doing. Great momentum, and the channel top indicates that it could go up to 100 and definitely above 100 for sure if the channel top has to be considered. So that is really bad for Indian economy. Gold seems to be attempting the fifth or sixth or seventh time since the last 1 or 2 years, trying to take out this channel top and then the resistance above that. So it's on the upward move. Once it hits the resistance, it just starts falling back. This is what is happening since long. So momentum is clearly sideways for a long time, and then it's part of a handle formation of a cup and handle on a medium term basis. Now use markets. DXY is Dow Jones was kind of indecisive last week closing. The last 2 days of trading in the US markets were not encouraging after the bounce gave some hope of a green pullback, but seems to be having selling pressure, and then you need to keep a close watch of before the market opening tomorrow. Right now, it may not be very indicative. Only if a big move is happening in the US market, then clearly it will impact our markets for sure. There's no doubt about that. But small moves like slightly bearish or moderately bullish, that may not really impact. So that is something that we have to see. So this screenshots are not correct. Actually, yeah. So I had pasted the screenshot of something else instead of the US market. So let's, without wasting time, quickly go there and see the US markets, right? Look at this Dow Jones indecisive close. That's Nasdaq, which is also kind of facing some resistance from the median, and S&P 500 also facing resistance under the median. So this was a big reversal after it fall big, right? After that fall back that happened, it has taken the support from the major Dow Jones. It climbed. It was quick, very nice retrieval happened, but last few days you're just facing the resistance. You just have to keep a close watch on that. Right now, actionables for the day. Bank of Baroda seems to be breaking out from a very good previous resistance. Right, there is enough scope for good swing trading for the next few days. Good volumes, good momentum, good trend. Ultrambon Chini also weekly charts is what is shown for both. Weekly charts is showing there is some breakout, some kind of weekly breakout with great momentum, super volume. I think it is something to do with the budget sugar policy or something. So the momentum, the trend, and the volumes and the price patterns all shows positional or swing trades to give some good profits. Once again, this is the same chart. We'll come back. Let's see. We talked about confluence of resistances that is there from Fibonacci and moving averages and all that. Green close above, full candle green close above this only would 61% Fibonacci only would indicate there is a rally condition that may be happening, but that did not happen. Market fall big 4% down, and it also slipped below the 50 DMA now. Bringing the momentum and the trend to the sideways. Trend clearly bearish zones on both. Momentum to the sideways basically. And it also was showing great strength, but for as a fall and losing the 50 DMA maybe the only not losing the 50 DMA maybe the only hope that is left now. So that's what mild bearish view as the chart says, support level says, momentum says, trend crossover says, and is actually crossover into sideways for the momentum, but trend is crossover to bearish zones in the short term. So institutional selling by DIs also is adding up to that bearishness views, right? So that's what all the bullish hopes that was there from the last week's bounce is lost now after this 3 days of 4% fall. That is one thing. US market is kind of at a resistance, and if that is again cannot maintain that and then falling back again means we are having trouble, right? Hopefully that may not happen. It may be just some resistance out there. Already a spec up today 8% one shot about 20 when the big fall happened, and about 20 is danger, means very high volatiles, tough to handle. Intraday swings, very tough to handle because V-shape moves can happen. So Fyers also turn DIs, both of them turning sellers concerned. The only positive factor is BANKNIFTY still shows strength. Well, 50 DMA is not broken, still is not as badly beaten as the Nifty. So there is a RBI monetary policy that may be slightly different this time. It may not be accommodative, or it may have some interest rate hike, probably. Never know. So market may be anticipating all that and then doing the circus. Never know. But that is coming out on Wednesday, I believe. So there could be volatility until that comes out. Right? No, so because of all those reasons, obviously use vertical or counter spreads with hedge risk defined strategies only, and have tight stop losses if you are playing the options or derivatives, right? So that is my view, mild bearish. I hope this helps in some way to frame your own view and trade plan for the tomorrow. If that helps you in some way, consider hitting the like button and share it to all of your friends and colleagues. So we have very few subscriptions, and your like, subscriptions, comments, feedback, everything is encouraging and motivating for us to keep doing this. Thank you. Happy trading. Bye bye.